Greetings traders, this is Houston Trung from thetradingedge.org, and here is your weekly market outlook for Jan the 20th to 24th, 2020. And so the payout cycle continues. The market continues to make fresh all-time highs and everyone seems to be making money. And the question is, how long will it last? Because it won't last forever, because the market is beginning to leave some clues in the form of some market structure that tells us that if and when maybe when and if the market does correct, then we're probably going to see a stronger pullback that's going to pull back and go against any late or weak longs. So that is certainly in the tea leaves already. However, that doesn't mean you want to get short yet, because we're still only mid-January. The January effect is in full effect, and if you get short early, it's the same thing as being wrong. You're gonna get run over. So with that being said, let's talk about some of the news items for the coming week, and we'll get into those charts to tell us, well, to help us navigate these interesting times. So for the coming week, first and foremost, it is a shortened holiday week. Of course, we have the MLK Day on Monday, or Martin Luther King Day, being celebrated on Monday, so the markets are closed, including futures markets, including bond markets. So the markets are effectively closed for the US on Monday. Then things recommence with a full trading day on Tuesday, although no econ news picks up until Wednesday. Wednesday, we do have these existing home sales at 10, nothing too major there. We do have that jobless claims number, though, at 8:30 on Thursday. That should be something to watch, as well as the oil number on Thursday, as we do have that holiday week. So the oil number now comes out the coming Thursday. And on Friday, we have the PMI, and that also be worth watching at 8:30 in the morning. Earnings does kick off, or some big earnings names are kicking off this coming week. Again, nothing much reporting on Monday because of the holidays, but on the 21st, the Tuesday, we got Netflix, IBM, and Halliburton. So Netflix certainly one to watch there, part of the FANG names. First one to report. And then on Wednesday, we have a few smaller, some good names like J&J. So we want to kind of see how some of those big Dow stocks are trading around that, as well as Texas Instruments, TXN. And then on Thursday, all eyes will be on Intel. So Intel on Thursday after the bell. So Friday, the last one to watch is American Express. The financials have reported now, and things look pretty strong for most of them. So let's see how American Express does, because American Express and things like Visa, they've been going up and up and up. So watch for that. Let's get into the charts now and talk about the week that was, and let's see how that helps us navigate the coming week. So the first chart that we usually go through, if you've been tuning in with me for a while, is the VIX chart, because once we get this chart done, everything's basically the mirror opposite. And the VIX chart, if you take a really big per wide time frame perspective, has just basically been melting. So it's now going to certainly not all-time lows, but with this VIX instrument, it is getting close to the point where you have to kind of zoom out or zoom in to make sense of the chart, because it is basically just decaying here. So right now, all I can say about the month of January is that it's a red month, pretty big red month. Relatively, it's minus 12%, so a decent red month for sellers. And we have this condition now that that I like to call momentum down. And the indices that we'll see in a few moments, they're all momentum up on the weekly. I call this momentum down. Outside bar and down and down. That's momentum down. This past week, we were looking to see, will this momentum continue? Because as I alluded to in the last week's video, momentum will not get extinguished until a prior high gets taken out. That did not happen this week. So will it happen this week? We'll wait and see, right? So we now move that line to above this week's high. For now, the momentum down condition continues unabated. On the daily chart, this is basically what you want to be, it makes it a little bit interesting, because on Friday we did have the outside day, but not enough to close the gap that was made on the Thursday gap down. So here you had an inside bar on Wednesday, so very tight action there on the VIX, and then you have the tight action on the indices on Wednesday. Then things gapped up on Thursday, and Friday gapped down slightly. Well, I think it was pretty much a flat open, maybe a slight gap lower. See, it closed at 1329, opened at, basically a flat open, and then it came back up through the range again, but wasn't quite strong enough to fill that gap there. So we're waiting to see now if that gap gets filled to complete this inside bar sort of reversal pattern here. Okay, expect that if this gap gets filled, you expect to at least take out that pivot high there if the buyers have any strength whatsoever. If they can't even do that, then yeah, you're gonna continue to see this thing melt further. Okay, so the last two 4-hour bars on Friday looks like this, outside inside. So going into the extended weekend, right, the holiday, into the long weekend here, on Tuesday when it opens up, this will be interesting to see how it breaks. Do we have any kind of macro news or geopolitical news over this long weekend that shows up on either on Monday during the futures markets or the open on Tuesday? We'll have to wait and see. But now this pattern is telling us, again, the bias is down because we're below weekly open, monthly and quarterly open. The bias is lower. You expect this thing to continue to decay. However, if it doesn't, if it pops up above there, then you want to see can it come back to the range by first taking out that gap, then first taking out that pivot high there, and then going after ultimately that weekly high right there, because that would take us back through something we've done for several weeks, and that was this situation here. We had a small bump, this small tweak bump where the VIX actually went up for a couple weeks, but that's that seems to be long forgotten now. That was way back in early, or sorry, I guess mid to late December. So let's go to the SPY and talk about the SPY, and the rest of it now is just basically the mirror opposite, because everything is trading on momentum now. And as I said in the beginning, this is not the kind of market that you simply want to try to take shorts in, because you will get run over. All these previous predictions of people saying, well, maybe Dow should find resistance at 29,000 or SPY at 3,200, whatever the number is. It makes you wonder where those numbers are coming from, because number one, obviously you can run through some fundamental calculators and try to figure things out based on P ratios and so forth, and market valuations of the underlying stocks. But there is going to be no resistance because these are all-time highs, right? So that's the kind of the definition of resistance, is that you would have to have some folks coming in there, and then you'd have to tap it a few times. Now at this point here, you're tapping it for the first time, so you expect to tap it again. So it's not going to be one of those situations where you're just going to do a V-turn bottom. It's not going to look like that. More than likely, it won't look like that unless it's some sort of geopolitical event that causes things to reverse like that. But if it's just going to be a slow grind up, it won't be a simple V-turn. It's going to be a tap. Something happens. It pulls back. It tries to tap again. Either creates a lower high or a higher high, and then comes back down through the range again. That's what you're going to see in terms of a top. But it's not going to be one of those tops where it's going to be a one-time tap and it's gone. More than likely, it won't look like that. So on the monthly chart, momentum and up condition, right? Outside bar, up. You're not going to see momentum extinguish on the monthly chart here on the SPY until this low, the January low. So this month still has 2 full trading weeks left. You're not going to see this month the momentum buyers get scared until January lows get taken out, right? So for the month of January, unless something very, very out of the ordinary happens, and somehow this month we're up 3%, all of a sudden turns into a red outside bar that goes down and takes out December's lows, right? That's another 2.5% there. It would take basically a 5.5% move to come back through to take out December's lows. That would scare out a lot of people, right? So that's a situation there. If that happens, then yes, that's going to scare a lot of people. If you can come back into here, that's going to scare some people, right? If it comes back in through here, then it creates a possibility of an outside bar. But until it gets even into here, yeah, you're fighting the trend. Literally, you're fighting the trend, and you're trying to, if you're taking shorts on the daily chart, what do you think is going to happen, right? So that's the question you have to ask yourself all the time: is if I'm going to short up here, what am I expecting to happen? Are you trading for big winners here, or are you trading for small profit takers? Now, I am taking shorts right now, and I will show you a short that I took on Friday. But these for me are I'm not expecting big winners. I'm adjusting my expectations and looking for smaller targets, because we are in a uptrend. Okay, so anything to the downside right now is very, very speculative. I've said it many ways now in different manners, but I don't think I can emphasize that enough, because on the weekly as well, outside bar up, that's momentum up now in the week for the SPY 2 green weeks in a row. We're not going to see momentum extinguish once again until that low gets taken out. So this prior week's low. So on the daily, what else can I say here? Like, this is a very, very momentous chart here. So here, we just said it already. Momentum up on monthly, momentum up on the weekly, momentum up even on the daily chart. So outside bar up, 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 up. That means we've had no lower lows, right? And since this bar ignited things. So that's a momentum up condition. Now, as I talked about right in the beginning, the market structures that the markets are beginning to leave us here are giving us clues. We have a lot of unfilled gaps that are, well, that one did fill, but we did have some unfilled gaps there. We have another one right there. This one here got filled, so I want to move this one over here now, right? And we have numerous ones down here, okay? So these momentum up conditions, although they're fun to trade and they can make money, people are making great money in these because the rest of the market, the individual stocks themselves are having some huge moves and a lot of people are making good money. This is part of the payout cycle. However, there will be a payback cycle where everyone who's used to chasing will, unfortunately, learn some hard lessons in that now the FOMO is working for them, but at some point in the near-term future, the FOMO will then begin to work against them because this is considered weak market structure. So when you have momentum up markets like this, the reason why it's weak market structure because these guys are chasing, and it's basically consists of traders who are either weak longs or again are chasing price. So their trade location is going to be poor. So any kind of pullback will cause gaps to get filled and these traders to get stopped out because they have poor trade location. So anytime you have these momentum up conditions, it's very easy to extinguish those gains once you begin to have momentum extinguished, and that's what we're waiting to watch right now. But the bigger momentum condition will not get alleviated, as I said already, until February or December's lows, or probably January's lows. It's probably a better situation because we still have 2 weeks left, is taken out. For now, you're watching these daily levels, right? So these daily levels here, you can watch see get extinguished, but you want to see ultimately can you take out the weekly lows and the monthly lows, and that's when you're going to see the bigger reversals. But right now, that is nowhere in sight. You might get a small reversal on on Tuesday, but again, that's very speculative, and you do not want to be putting huge size in that. That's a very speculative trade. Okay, so that's it for the SPY. What else can we say about the SPY? Look at the 4-hour chart. Okay, so we talked about it already. Monthly chart, momentum up. Weekly, momentum up. Daily, momentum up. Look at the 4-hour chart. Momentum up. See, outside bar up, 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 up. That's momentum up on the well, this day here. This is the I believe it was that's Wednesday. Had a small bar here. This low was slightly lower than that low, so 327.30, 327.26. Some people try to short that, right, and they had to cover right away, otherwise they got run over. If they did not cover, right, look what happened. It gaps against them, and then it runs away. So they're going to get squeezed. If you try to short this thinking, okay, this is going to break down here now. Really? You really think it's going to break down? It's trading above the weekly open, above the monthly open, and the quarterly open. So full time frame alignment to the upside, and it's trending. There's no reason to short this thing except for very, very small speculative profit-taking trades. And I'll show you again what I have small trade on. But again, just it's not. I'm not looking for a huge reversal, looking for small gains, and willing to take small losses, right? So I'm not going to get hurt badly either way. Let's talk about the Qs now, because that looks very, very similar to the SPY chart. Monthly chart, inside, outside, up, up, up. So momentum up on the Qs. Weekly, momentum up on the weekly chart. So I'm beginning to sound like a broken record, right? So let's move our line now. Momentum will not get extinguished until that low gets taken out. Alrighty here. So on the Qs, we have momentum here. It went momentum up, 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 up. Then on Wednesday, just like the SPY, we had a small blip here where we actually had a lower low, right? So this low was technically lower than that one, but the buyers bought it back right away and bow. It closes near the highs, all-time highs on Friday. And on the 4-hour chart, just to kind of show you what happened there on the Wednesday, where the sellers, they actually try to stick it to the buyers, and it did not work out for them. So here's that little small blip where you had a small lower low. It looked like this. This is why it's a nice look at the 4-hour chart, because you get a little more granularity. Outside bar, outside bar. So the short-term people are getting chopped up because you have a small, what they call a broadening formation here, because that high is higher than that high. It's very tight stuff, but I'll show you what that looks like. This high on this outside bar is higher than that high, right? And so here it goes inside, outside, inside, and down. So now on Wednesday morning, some shorts try to sell the markets. They were able to break below that bar, and they would take that pivot and that pivot. So they made a little bit of money. But immediately, the buyers brought it back, bounced off this 8 EMEA, could not break below the weekly open. I'm going to zoom in a bit more so you can see that better. Okay. And they pushed it back up again, creating a hammer. So now it's inside and down. Once you break above here, it's the inside bar reversal that I've talked about many times. Inside bar short, right? People get short on the inside bar against all the time frames. They're shorting against time frames, against the trend. And then as soon as it breaks above there, they have to cover because they know, everyone knows where the pivots are. All-time highs, bam, bam, and then they get, if you don't cover, you get squeezed. That's what happens. People who do not cover here, they get squeezed, and now they're on the pain train into the long weekend, right? Terrible place to be. You're short a bunch of, futures contracts or puts or Qs, and now you're holding that over the weekend hoping for some bad news on Tuesday, right? So it's really the worst place to be when you're hoping for bad news over the weekend to try to bail you out of a trade. So that's not a fun place to be going into the weekend. So traders know that, so they put the squeeze on them. Now, just to finish the broadening formation pattern, why that gets resolved that way is that low is obviously lower than that low. Okay, so now if you zoom into a lower time frame chart, let's say the 60, it looks like that. There's your broadening formation. Lower low, high, lower, lower high, high, lower low, lower low. It confuses a lot of people, right? So I'll just redraw that there. Confuses a lot of people, and then it pops up to the other side, taking out all the pivots on that side. Consolidation, right, for a few hours, and then gone. Here, when you're short down here, you're really hoping that this is going to break down. Correct? So if you're short down here and it gaps up against you, this whole day on Thursday, you're like, boy, I really, really hope that it comes down here now so I can, try to salvage this trade. Because if you got short down here, right, you're really far away. But they did not let that happen, and that's what happens when you fight the trend. You're fighting the trend, pow, goes against you now, and you're going home on Friday and to the weekend with a momentum condition. Outside bar up for the final trading day, for the final trading hour of the day, and they squeeze them right into the close. And folks who got short in here, you had to cover here, right? And that's what happened, short covering right to the close. So that's the picture on the Qs, and guess what? The Dow also looks the same. Surprise, surprise. Things are trading in lock and step right now, high correlations, and alternatively, although the VIX and the volatility is very low, like I said before, individual stocks are generating huge beta. Contrast that with the forex market, which is basically barely open. It's at historical lows in terms of volatility. The volatility in the stock market actually looks pretty decent compared to what's happening on the forex market. So on the Dow front, look, outside bar up, momentum up on the monthly. Same thing on the weekly, momo up on the weekly. And on the daily, not the exact same pattern, pretty much the same. Because this here, outside bar, inside bar. So here's the outside bar on Friday, right? Last Friday I said we want to see what happens after the outside bar, because the outside bar itself is not significant. You just can't short this. You cannot just short this because it's red, thinking that it's going to come down here now. You need to see what the next bar is. We always want to know what the next bar is. So because that's the only way we can get ahead of price is by asking what's going to be the next bar and then thinking through the possibilities. So here, when the Friday ends red like this, it was down close to 0.5%, 0.46, 46 basis points, right? So wow, it's the world's ending, right? On last Friday, until you get an inside bar on Monday. So now you really want to see what's going to happen to resolve this pattern, outside, inside. It goes outside, inside, and up. It doesn't look back again. And Dow, recall what I said last week, 29,000 was resistance. It hit there, right? And I said it's not going to be strong resistance because it's the first tap. So it's not going to hold because there's no other previous instances of 29,000. There's no reason for people to all of a sudden just step up and say 29,000 is going to be the line. It's going to take several taps of it. They tapped it again here on Tuesday. They blew through it on Wednesday, Thursday, Friday. Now we're talking Dow 29,300. So yeah, well above there now. And on the 4-hour chart, it looks like this. So on the Dow, here. Okay, so here's your prior Friday. It looked like that big outside day on the Friday. Outside bar, down. That's momentum. But this here on Monday, immediately, remember, this is the inside day on Monday, this immediately creates consolidation and shows a stalemate between the sellers who are not able now to push it down any further and the buyers. There's your stalemate. And guess how that resolves? Up. Right? There's your former Dow 29,000 level right there. Does it look like a resistance? Not really, because it goes, this is actually a momentum extinguishing pattern. Goes outside bar down. As soon as it breaks above here, they're immediately going for that pivot there, right? Because they know the stops are there. That's the former all-time highs. And this bar does it. Up, basically up 0.5%, stopping anyone who got short in that sequence. And then it's just a matter of, okay, people then try to buy the breakout. The breakout guys got involved. It failed here because here they get scared out. We're talking week longs here, right? So I'll just show you the funny price action. So here's your former level of resistance, quote unquote resistance, if you want to call it that, 29,000 or 290 on the Dow, or DIA approximately, right? So here it breaks through, all right, and it goes inside bar. So anyone who buys this breakout here, right, thinking, yeah, it's just going to blast out, they were right on the direction. They just have poor timing in terms of trades, because you just can't buy highs like that, because this pulls back against you. So you buy 290, and then it goes all the way down here to basically 288.87, but it stays inside bar. So you're not technically invalidated, just that you have poor timing. And then you see you have to sit through that 4-hour sequence. It stays down here again, then finally breaks through inside bar, and you know the rest of the story. So on the hourly chart, it's very, very funny because you see the immediate reaction if you buy breakouts. Look, so here's your 29,000 level, DIA 290. People here are buying this breakout. Okay, they're buying this breakout. Look, it works for 2 bars. Boom, boom, and immediately you're wrong, right? So if you buy this bar here, what are you going to put your stop? Down here? Why would you put your stop down there, right? Here? Here? Well, they're going to go stop hunting, and anyone who put their stop there, they immediately got stopped out, right? There's a small gap there. They filled that gap as well. And then it goes down, inside bar, reversal right here, inside bar reversal right there, and it comes through. So there, on the reversal, that's the better buying opportunity right there, and then it breaks through. Reverses once again, right? So pulls back once again, and then that's the way the market works, right? Constantly stopping people out, looking for liquidity, popping up, looking for more liquidity, and doing that price pattern over and over again. Once you get used to seeing the markets that way, then it becomes a lot more simple to begin to explain price action, because people like to say that price action is random, and I wouldn't go that far. Rather, I would say that price action is unpredictable, right? So you may understand where the price is going to go. Let's say, when you're back here, when we were trading way back here, there was a very good inclination that Dow was going to hit 29,000, but you had no idea how it was going to get there, right? So that was the uncertainty and the unpredictability of price, because at any given time, you don't know, which traders and which investors in the world are going to do what. So it's unpredictable. But the reasons why they do it is not random, right? So the people are doing things for a reason for most of the time, and so price is not necessarily random, but it's just not predictable. Even though you can have price targets and they can get there, no one in this world knows how it's going to get there, and no one can predict the outcome of each bar. So that's the actual fascinating part about price, is that it's not necessarily random, but it's certainly unpredictable. So let's do one final index here, and that's the Russell. And now the Russell doesn't have the momentum up condition, but it looks very, very similar. And this thing's been on fire, because here, month of January, up 2%, broke through that broad formation now, came right back through that range, right? So everyone who's getting short down here, you had to cover because you're clearly wrong. Right back through that range, 1, 2, 3, 4th month, 5th month now, going on green. Weekly chart did a reversal. Okay, so this is what we're looking for last week. How do you, if it's going to reverse, if it's going to come back up, it has to come back through the prior week's high, and that's what happened. So until this week's low gets taken out, the Russell's in pretty good shape, right? So that was a big week for the Russell this past week, and it was leading at various points during the week. And it always makes me nervous, because in the past couple of years, anytime the Russell's been leading, it's usually been a trap for the bulls, as it tends to show that people are getting very, very speculative, very, very I wouldn't say the euphoric is the right word, but very confident with their bets, and they're willing to take riskier bets by buying these smaller caps. And oftentimes the small cap guys have been the ones left holding the bag, and that's where the people get trapped. So for now, though, you know, until you see this low get taken out, man, it was a good month, a good week for the Russell, up 2.5%. Did the reversal of price here, so I'm just going to show you that reversal right there. Okay, and that took it above the broadening formation. So now on the weekly chart, we do have the momentum condition. So there you go, weekly, outside bar, up, 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 up. Here I did get short, so now I am short the Russell, not short IWM directly, but I am short via the micro futures, so the M2K product from the CME, interesting micro futures product. So shorted right there on the reversal signal. So I've talked about it before. This reversal is called the Red Dog Reversal by Scott Redler, and Willen gives a shot, but again, not trading large size because clearly it's speculative and going against the trend, but hoping to see either this low get taken out or that gap get filled. So shorted right there, not on the Russell, but basically the same level is the high of this bar, 169.87, and now expecting this low to get taken out or that gap to get filled there. This outside bar up condition will get extinguished if Thursday's low gets taken out. So that's what I'm waiting to see, and I'll be out of this trade if this high gets taken out. So pretty straightforward trade there. Okay, so on the 4-hour chart, it looks like this. So, okay, so here's the prior week's high. Okay, here's a little bit of price action, a little price action tutorial. So here's your price. Remember the purple line is your prior weekly's high. This bar here, correct? This is on the this is Monday. This is Tuesday. It breaks through the prior week's high. Then, if you buy the breakout, what happens? You're typically going to get stopped out. So it comes up here, you're right for half a day, then it comes back down against you. All right, comes down, it comes in again, and then does inside bar, and then it's gone. So starting from the week though, it looks like this. Remember last week on the Lexus video, I said you need to wait and see what the next bar is on Monday, because this is going inside bar, down, inside bar. That's a stalemate, right? So it was momentum and inside, so outside, inside, and down, inside now. You want to say which side of that range is to break out. On Monday, it started the day lower, but once it came back through the range and took all that high, inside bar reversal long, right? So boom, that pivot's gone, that pivot, that pivot, that pivot. It does it all on that bar. Took it all through, okay? And now comes back down again and then sets up here on Friday for a inside bar reversal to the downside. Watch, inside bar and up, right? Opens up here, it's a gap. The bulls get exactly what they want here, right? So here, if you're a buyer, if you're long already, you can't ask for more. It gaps up, right? But what happens instead? It should keep going. But instead, what happens? They immediately sell it. It comes back in the range and it keeps going down. So there's your inside bar reversal, because anyone who bought that inside bar, now it's come back against them and they're going back after those pivots. So that pivot got taken out, and now looking for that pivot to get taken out, and let's see if that gap gets filled there, Thursday's gap. Now let's continue. Let's talk about TSX for us Canadians. Man, this thing is going to all-time highs as well. So monthly chart, big green month right now for TSX, up about 3%, so 2.9%. Looking very strong now for TSX, going into those all-time highs. What can you say about that? North America, just on fire. On weekly chart, okay, big green week, up 1.88%. Going into those Bollinger Bands now. So basically what you want to be seeing here now is, do you get that Bollinger Band walk? Going to come up here, has to keep walking up, otherwise it can pull back in. Not saying it's going to correct and become a crash. It just means price has to keep going, otherwise you can either consolidate through a pullback or through time by going sideways. You want to see if this gets a reversal by waiting for that low to get broken down. Look at the daily chart. Nothing much to say on the TSX chart other than it's going straight up, right? So now, look, 5 consecutive green days. And what can you do? You do not want to fight this trend, right? If you're trying to short on these signals or on these bars, you have to ask why you're trying to short that, because right now it's not indicating any weakness. So look at how strong that is, going right in highs. Now, this could change very quickly, and then these are obviously, there's some unfilled gaps that are in place here that can certainly be be spots that have to get filled at some point. But for now, you do not want to be finding that trend and starting your year that way. So let's move on, because there's nothing much to say other than to say it's momentum up. Because look, it started on Monday. So look, outside, inside, last Friday, we said, how's it going to open on Monday? Same thing we saw the Russell, right? Went down first, but then went up. And then it just has gone nothing up in a straight line. Outside, up, 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 up. That's momentum. Momo up. That's called Momo up. If you don't believe what the markets can do, look at that chart, right? Like, that is Momo up. There's no other way to describe that than, to say that's a momentum condition. So, price is going up and people are chasing now, and this is poor market structure, because eventually, anyone who gets involved here or there, it will not take much for them to cover. But again, you do not necessarily want to be shorting into strength here. You want to see a bit of weakness, because if it does get weak, it will come back through the range. You don't have to catch the top, because it will create a bigger broadening formation that will cause it to come back through the range again. And you don't have to try to catch tops, because that can be a tough way to trade. So imagine if you got short here and you're carrying this over the weekend, again, not a fun place to be for the long weekend. Let's talk about EM. The pace of EM has slowed down a bit, but very, very strong month so far, the month of January. So on the monthly chart, it is Momo up, surprise, surprise, on the monthly chart, up 3% already, 2 weeks left to go for January. Momo up in January on the monthly. Week did a reversal, a bullish reversal. So it started the week lower, the prior week that is. It went down on one side, and this week here, gaps up, immediately takes out the prior week's high. So that's a reversal right there. Okay, so that's basically a reversal on the Monday. Okay, and then there's nothing much to say here with EM, except that it did this on Wednesday. So here, Tuesday, inside bar, on Wednesday went down, inside bar reversal right there on Thursday, right? So they try to break it down, they could not hold it. Once it breaks above there, takes that pivot high out on Thursday, now that pivot got taken out, they're going after that pivot there, 46.32. You're not going to get a big reversal once again until you see a low get taken out. So let's move our level now to this prior week's low. We don't even, you're not even going to try a short until that low gets taken out. If you are taking shorts before that low gets taken out, they're profit takers. You're not trying to look for big winners until that low gets taken out. All right, and maybe I haven't said it before, but there's two ways that my method and the folks that I coach that we use, we're either going to A, look for a setup that's going to cause this level to break, or B, wait for the break and then look for a lower time frame to trade that continuation pattern to the downside. Okay, let's now talk about bonds, TLT. TLT not doing much this month. So inside month so far, staying inside month, that means it's choppy, very, very choppy stuff. So there's your inside month right now in TLT. So, just doing a lot of nothing right now, up 1.87%, but not a place you want to be trading actively, because you will get chopped up, especially if you're trading just TLT. Maybe if you're trading more leveraged products, like bond futures, maybe there's you can play ranges. But with TLT, you do not want to be allocating your capital that way, trying to trade a product that's not moving. So here, situation, you're trading inside this range, right? So here is December's range. You're inside it. You try to break above the last week of December's high, went outside bar up. So there is momentum. Technically, there's momentum because it goes outside bar up. It is Momo up right now, but you can see every time it tries to stay above that level's high, it comes back in the range. So that's why you're getting that inside month, and it's choppy. If you look at the daily chart here, right, it's like 2 steps forwards, 2 steps backwards, or maybe 1 step backward, but that's choppy stuff. You're gonna get, there's way smoother stuff to be trading than that stuff there, especially if you're gonna be trying to swing trade this stuff. Maybe in trade A, but again, this stuff here is not even worth trading. Okay, so let's talk about gold now. So I've been usually showing the GLD product, but I've also been exploring the gold futures contract by COMEX. So today I'll use that for our analysis. A nice alternative to the big contract, the GC contract, the big COMEX gold contract, futures contract. Here's the basically the micro contract, so easier to hold to make swing trades. So here we go on the gold contract. Front month. So right now, big green month, right? So not bad way to start January, up 2.44%. On the bigger picture, let's No, let's just do this. Let's just keep going with the monthly picture first, and then we'll do. Actually, let's do this. Let's do the big picture first. So the 3 month, right? So it is momo up on the quarterly, right here. Quarterly, up, up, inside, up. So inside quarter and up as well. As you can see from the gold futures contract, I'll just show you the monthly. You can see the volume has been steadily elevating. So when this thing launched, back here, it didn't have a lot of volume. But now you're getting a lot more volume, so this is actually a contract worth looking at because the volume is increasing. So it becomes more interesting to trade because there's better liquidity. On the weekly chart, we have this situation. The prior week, the GLD didn't show it, but some of the other gold products did show it. He had that big shooting star, right? So after that, he ran a debacle when it didn't really go any further, did not escalate. Then basically, people shorted gold. Or took their profits, and it created that big shooting star. And then on this week here, they actually broke below that low, but then the bar stepped back up again, but you're back in that Bollinger Band. So that's what you want to be looking for now, is how do you break out of one of these ranges, either this week's high or below this week's low. But note, this current move in gold could simply be a pullback. So we now know that in gold here, right? So on the daily chart, that low, that was the prior weekly's low. It got taken out on Tuesday. Now this could simply be a multi-bar pullback. So that's what you want to be waiting for now, is do we get an inside bar reversal to the downside on Monday night or on Tuesday, right? Because the futures open on Monday night for trading for the Tuesday session. So this level here, I'm going to mark it in blue, is the level that I'm going to be watching. I'll just change that to blue now, because this inside up condition, if it fails and the sellers come in here now, they're going to come back through the range again, possibly triggering this weekly low, the prior week's low, right? So if we look at that weekly chart once again, this looks very bullish right now, correct? You have a shooting star, a hammer, but if it breaks back below here again, anyone who bought that, they're gonna get stopped out when it breaks below there. So that will be the pivot, that if this low gets taken out, right, we can expect to come back through again, because anyone who bought that, their premise for buying it it has been invalidated. So we're watching that on the GLD product, because on the 4-hour chart, looks like this. So kind of tight stuff there, right? Very tight stuff. Not a lot going on. The geopolitical risks have certainly eased up. We did a lot of consolidation there. But right here now goes outside bar up momentum, very tight range. This is range trading. Hits the top of that range, and then if it breaks below that low again, you can expect to come back down there, hitting that low there. That would be the daily low, right? Friday's daily low, and then there's your weekly low right down there. So we're watching for this potentially to ignite that, and then possibly ignite and trigger that previous weekly low. Okay, let's move on now to Bitcoin, because Bitcoin has recuperated significantly from the lows we saw in December. Now, Bitcoin has been a bit of a laggard compared to some of these other cryptocurrencies, and if you listen to my videos, you know I was long about a dozen or so of them. I'm still long a lot of them. Still long about 10 of them, but on a lot smaller size now, as I've been profit taking along the way, because it's these big ranges. You want to be you want to be starting your year off well and taking some profits along the way. So on the BTC chart, let's talk about this. We have this situation here, basically a nice big green month. Now we had a reversal right there, so broke above December's high. So now it actually, well, let's talk about the daily chart in a few moments here, and then I'll give you the details. But basically a big green month so far, up 23.89%, and I'm saying that's not even a big return compared to some of these other cryptos like ETC, like Bitcoin Cash, like BSV. Some of these names are up over 100% in the past 2 trading weeks. Okay, so here's your Bitcoin trade. Okay, reversal right there, reversal on that week there. We talked about it already, and now simply want to be seeing, do we get any weakness? Can it take out the prior bars low or not? Do any sellers step up? Because right now the resistance level is 9,000. Not strong resistance, but there is some previous memory there. So that's the difference between going into all-time highs versus going into levels that people know already. We have some previous resistance there around the 9,000 level, and on Friday we hit 9,000 right on the dot on the Bitfinex exchange. So right here, there's 9,000 right in the dot there on Bitfinex, and went inside bar up. So now inside bar here so far on Saturday. Let's see if they continue to do the momentum condition up here, or does it break down, go inside bar reversal back down, taking out some of these stops down here. But as you can see, when I talk about that Bollinger Band walk situation, we have a few examples of it here, right? So here, anytime you break, even on cryptocurrencies, it works. So when you break through the Bollinger Bands, it has to keep going, because if it doesn't, you're going to correct either through a pullback or through time. So here, it pulls back in a pullback situation, right? You have basically a 2-bar pullback until this thing turned to an outside bar and turned green. There, broke above again the Bollinger Band, stayed above there slightly, then you consolidated through time. Once again, broke up above the Bollinger Bands, could not stay above, consolidating through time. So now it's a inside bar up condition. Saturday right now, unless things change, we'll probably stay inside bar. But that's that the expectation now is that we possibly ride higher, because there's nothing saying we're going to get a reversal until this weekly low gets taken out. That would be more significant than any daily level. All right. So let's talk about ETH/USD, another laggard right now, but Ethereum is showing a lot of potential. So Ethereum here, like Bitcoin, it went red month and then green month. So there's a reversal as soon as that high gets taken out on Ethereum, the prior month's high. The weekly chart, this is how I'm long. Very, very simple pattern. Not a lot of rocket surgery here, but I'll give you the explanation on rationale on why this trade works. Is here, simply long on the break of this inside bar. Okay, so you can just see it's a pretty decent trade on a weekly chart with no heat, right? So it's up 3R on a weekly setup, on a weekly signal. Inside bar. As soon as this inside bar gets broken to the upside, long stop is below there or below there, and now up 3R on a weekly signal. So not bad at all. Expecting this thing to go even further. Why is this trade? Why is it even worth looking at? Because the understanding is that if this thing is going to work, right? You have a situation here now. We have lower lows. So let me redraw this. If this Browning formation plays out, then you can expect a higher high. So a high that's higher than another pivot's high. So it's going to be price is going to go either above here, above there, or potentially even up above here. Okay, so that's going to create a higher high, thereby creating another Browning formation. Now, factor in how time frame works, you get even a more potent signal. Here is the quarterly open, monthly open. At that point, that was the weekly open in that first week of January. As soon as price breaks above that bar, stays above here, it's all green on every single chart you can look at. Whether that's the quarterly chart, the yearly chart, the monthly chart, the weekly chart, it's all green. So everyone who's looking at that chart sees nothing but green, and that's not a situation you want to be shorting. That's a situation where you want to be following the trend, and the trend at that point is up on all time frames. Okay, so one final thing before I move on is here's a potential target for Ethereum. This is the multi-time frame analysis. Okay, so inside bar and down on the quarterly. If we can break above the prior quarter's high, 199.08, we can go back to that pivot there. 318.30. Okay, so that would be a significant move from where we are now. We're trading at 176.37. We take out that pivot, an 80% move potentially from that current level, 176.37, to the 318.30 level. So if I draw it into my weekly chart, the 318.30. Okay, so that puts us back in this pivot here, right there, this pivot high, and this, not coincidentally, is an outside bar. Okay, so if it gets back up into here, and who knows with crypto, sometimes it can do it in 2-3 big bars, or it may take a multi-month move to do it. But if you can start to trade around this level here, it's very, very likely we're going to take out that pivot high. Okay, so 318.30, the longer term pivot to watch for Ethereum. All right, so let's review a few interesting names. We'll go through the FANG stocks because we have Netflix reporting on Tuesday, and then we'll do a few a few kind of fast fire stocks, and then we'll wrap things up. So let's take a look at let's start with the FANG names. So what about Facebook? How are we seeing Facebook playing out right now. Facebook, surprise, surprise, momentum up, looks just like the NASDAQ. Momentum up, up, up on the monthly, momentum up on the weekly. You do not want to be showing this until you see a prior low get taken out on Facebook. Right now, you know, even though it's a little choppy, going into those multi-year highs. Getting close, yeah. Did I break above there on the monthly chart? Looks like it's all-time highs again. So it did take out, yeah, high of 218.62. Yeah, we're well above it now. So yes, all-time highs, Facebook. Apple now. Man, does Apple look like the NASDAQ chart? Yes, it does. Going right in the highs there. If you look at the weekly chart now, momentum up condition on the weekly. That's all you need to know. Momentum up, 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 up. You know, we've been watching it, you know, saying momentum here. Keep, you know, we're just trailing it up every single week now. Do not want to be getting short these things until at least it breaks a weekly low. Because again, like I'll say it one last time, you don't have to catch the top. You do not, because that's a tricky game. You simply wait for price to begin to break some levels that will create a major or larger reversal, and then you're going to have plenty of time to get in the trade, because if the trade works, it's going to come out the other side. Literally, it's going to come out all the way back through the range again, and you're going to have tons of time to get into that trade, versus trying to pick the top and expecting it to come back through the range again. Wait for the top, or take a very small trade to try to catch the top, but expect to be wrong before you actually do catch it. Amazon a little bit slower, kind of a, you know, kind of doing not a lot. So red month so far, Amazon inside up on the weekly, and it inside bar reversal on the weekly. Let's look at the three month chart. So trading in a very tight range. Yearly chart, yeah, look at Amazon. Look what happened in 2019, right? Inside year 2019, so it didn't do much. Starting off right now inside of the prior year's range. So how do you get outside of that 12-month range? And this is why the quarterly chart looks so choppy, because you're inside that yearly range, and that's why the monthly chart looks that choppy, because again, you're stuck inside the prior year's range. How do you get outside that year? Okay, until you do, expect it to continue to be choppy. Let's talk about Netflix now, right? So Netflix earnings on Tuesday. Okay, look at that, 1, 2, 3, fourth agree month in a row. All started here, right? Momo down on the month. As soon as that high got taken out, that got extinguished, and they come back up to the range again, trying to take out that pivot high. The guys who got short here, they're really hoping it doesn't come out the other side. They're like, please, I had a great trade up here. I've been short for several months now, you know, nearly a year, half a year, whatever it may be, and now it's come back and I'm losing all my profits, right? So now they're hoping it doesn't come out here, otherwise they're going to have to cover. Otherwise it's going to be a Tesla situation, right? So there's your weekly reversal right here. Happened a few weeks ago. Inside bar down, look back for Tesla until you get that move right there. Inside bar reversal, took out all those guys who got short in here. Okay, here's something interesting. Like this is why it's interesting to look at those 12-month charts, right? Last year, 2019, huge year. Huge? No, up 20%, but inside of 2018's range. So still inside year, right now inside of 2019's range. How do you get out of that? All right. Now let's talk about one more name, Google. So bring up Google. Google right now, not inside year. Look at this. On the yearly chart, momentum for the past several years. Up, 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 up. Even in 2018 when it had that kind of flat year, still created new highs and did not break below that low. So Momo up on the month. Google right now, look at that. All-time highs, just like the NASDAQ chart. Momo up, Momo up. Okay, and the weekly chart, same thing. Really ignited 2 weeks ago, right there. Outside, right? Chopped up a bunch of people here. A lot of people got stopped out trying to get short here. They were wrong. Now they got squeezed, and they're still going into those highs. Finally, we'll do some fast fire charts, things to watch the next week. So here's a few interesting names. DDS, Dillard's. So Dillard's here. Outside, inside, inside. So setting up for something interesting here now. We want to see how this past week's ranges break. So watch for that on Dillard's. COP. Okay. So Conoco. 2 inside weeks in a row. Okay. What's it telling us? Something's going to happen because the volatility is getting very, very tight. And now, once again, you want to see how that range breaks, because that could be significant. Either we're going to rock higher or we come back through some of this range here. ConocoPhillips. Glue. Okay, GLUU, Glue Mobile. Here we go. Outside bar, double outside, now inside bar. So people got chopped up here like we saw on that Netflix chart. Anytime you see people get chopped up like that, if a move finally happens, these folks who got chopped up, they have to get back in there if they really want to partake in that move, and they will chase price. And so expect this guy to finally make a move if they can break outside of that double inside pattern. That double outside pattern. STM. Okay, so semiconductor name. Look, going right in highs, outside, inside. Right, this is already going into highs, but the momentum continues, we've been seeing, and this guy could go into, you know, all-time highs. Well, still far from all-time highs, but into multi-year highs that you haven't seen since 2004. So that, you know, that takes us back, you know, over half a decade. All right, so there you go. And another interesting name to watch for here is Tandem, TNDM, a wider time frame chart. On the monthly chart, it finally did this: outside, inside, and it broke to the upside on the easy for me to say on the monthly chart. So on the daily chart, it looks like this: inside bar right there, right on that monthly open. So that blue line is your monthly open. So they're consolidating right on that monthly open. So you break above there now, that's potentially interesting because that will trigger the monthly chart to even further, right? And you can go after these pivots here, so TNDM. Okay, so let's just wrap things up now by looking at a few final charts. Let's look at some stars and dogs. Let's begin with the dogs first. So some of the dogs that we've been watching, and I call them dogs because based upon a modified Sharpe ratio, these are kind of the worst names that I'm looking at. ATI, so steel companies, like I said last week, they've been getting hit, still getting hit right this week. They did a small bounce, but came back to the range again, although we have earnings on 21st here for ATI. Watch that. You know, let's see. Some of these dogs, when they bounce, they really start to run because people have to short cover. So they're worth watching for that reason, because it's not improbable for some of these dogs to then turn to stars, like we saw with, you know, Beyond Meat, Overstock, etc., etc. US Steel, same thing. You know, like these things have been beaten up now for the past 2 months, and so, you know, let's see how far things go. So right now, X looking very, very weak. UNG, so the Widowmaker. Nat gas, I guess, you know, it's a warm Christmas or a warm warm winter, because they are selling nat gas, and nat gas is going to, wow, multi-year lows on the UNG contract. Okay, so anyone trying to pick a bottom on UNG, you're not finding it yet. Momentum down. Crisp, CRSP, getting hurt for the past couple weeks. So, you know, kind of boxing in this area here now, hitting January lows. Let's see how that breaks out. And finally, one of the worst charts based upon that Sharpe ratio is the VIX. So we already showed this chart, but look at the trend on the VIX, right? It's a volatility seller's paradise, VXX. Let's talk about stars now. Want to see a star? We showed it already. NASDAQ is not going down until Apple stops doing this. Momentum up and up and up and up. It's going. Speaking of NASDAQ, that's actually one of the best performing ETFs and stocks that I'm watching on my basket. Look at that situation now. NASDAQ all-time highs. We showed that chart already. VRSN, so VeriSign, very, very nice looking chart. Really ignited the past couple of weeks. So getting close to those all-time or multi-year highs. There's July highs there. And one last one, JD. We're talking about some of the Chinese ADRs doing very, very well, and JD being one of them. Okay, so they are, you know, the tariff thing is not affecting them whatsoever. If you look at the weekly chart now, so they're going for that pivot right there, 45 area, the 45.23 area. So JD. All right, so we went a little bit long this week. We shared a lot of stuff, so hopefully you found some of it useful. As always, if you enjoyed the video, please give it a big thumbs up. That way other folks can find it as well. If you really like the videos, click subscribe. That way you get a notification as soon as the videos are published. If you have any questions, feel free to drop them in the comment section of either YouTube or on the actual blog, thetradingedge.org. As always, I hope you have a great trading week. And as I said before, be careful with the shorts out there. Right now, the markets are not showing any indication of slowing down. Plenty of January left. And if I leave with any other thing else, you don't have to catch the top. All right, you don't have to catch the top. All the best and happy trading.